So I don't know about you, but everywhere on social media, people are saying that we're in an overvalued market, companies' valuations are inflated, and they're not particularly wrong. But there are still a lot of opportunities out there. Companies that are out of favor are being discounted thanks to the hype being attracted to other industries. And so this is where I think a lot of opportunities can be found. It's finding these companies that used to be in favor and today are not, and they're ignored. And so their stock prices are down, they're discounted. And if you look at the fundamentals and the fundamentals look great, that's where you can find a good value opportunity. And so today I'm here to talk to you about GoPro. But before we start, here's the baby sloth. I think that deserves a like. Back in the day, GoPro was the company that you had to have outdoors whenever you went on a road trip or if you played extreme sports, you had to have a GoPro camera. And this is something that created a very strong brand around the company. The thing is that, have you heard anything about GoPro recently? I haven't. The company was failing in many respects over the last few years, and that is why today the company is out of favor. No one wants to talk about GoPro. Everyone's saying smartphones are taking over the camera market, and so you've got all these different things saying that GoPro is essentially a lost cause. That's what got me interested, because I started looking into it, and I think GoPro is actually a turnaround play. It's true, GoPro was a pure hardware business selling cameras. It was not a very sticky business model because how often do you need to buy action cameras? Definitely not every few months or every year. You can stick with one for 2 or 3 years. The margins on that, it was 30%, and the business relied on that single revenue stream. It had no diversification, meaning that if anything happened to that revenue stream, there was no hedge on the downside. That's why the business model wasn't really sustainable. However, they became very good at selling action cameras. They have sold over 41 million cameras. That's huge. They're so good at selling cameras that 93% of every dollar spent on action cameras in the US goes straight to GoPro. Now that is a competitive advantage. Okay, that's a moat. Yeah, so as you can see here, this is in their recent investor presentation. They have sold over 40 million cameras. They are growing like crazy. And this right here, active paying GoPro subscribers, is what I want to talk to you about. GoPro has created apps that enhance your camera experience, such as by using artificial intelligence to edit your videos, or to remotely control your camera through the app, or to have access to cloud storage, or having a stabilizing algorithm, and so a bunch of other features. And basically this has become a subscription. They're selling this as a subscription package, and it is annual recurring revenue. And this is a major, major plus. Any company that starts to dip its toes in recurring revenue with software, it's a very good thing because the margins are very high. For GoPro, the margin is 80%. And it's a very sticky business model because it is recurring revenue. Today, they have 1.2 million active GoPro subscribers, and they're targeting 2 million by the end of the year. This is a very good metric, okay? This new strategy is growing. That's very good to see. And the other really good thing about this slide is that here you'll see that they have a very wide reach on social media. Almost 40 million followers across social media. That is really good to see because it's going to make it that much easier to upsell subscription-based products to their current followers. 50 million that themselves also had access to a wide base of followers. So by adding this subscription-based product to their revenue, they're essentially de-risking the business because the biggest weakness of GoPro was that it only had one revenue source. And now with this, they're diversifying. So this is essentially exactly what investors needed to see, and GoPro is implementing it well. So as you can see here, the business, it went through a transition. The old GoPro was hardware only, 90% of it was retail, low 30s gross margin. It transformed and added subscription-based products. Now they have an actual direct-to-consumer channel, which is their website. And obviously they have a slightly higher margin thanks to that. But where they want to go and where the money is going to be coming in is not only the hardware and the subscription, but the app monetization. They're going to monetize each app that they have, and that's going to bring in a lot of money. Think of like in-app purchasing and, overages, excess, data storage. And so basically, the direct-to-consumer channel, they want it to account for over 40% of the revenue, and with gross margins hitting 40%. This is good. This is the transition that we want to see. This is a textbook example of a turnaround play. This is why they want to grow their direct-to-consumer channel. 35% of today's revenue is from their website, GoPro.com. 65% of it is from all of these other guys. These are the middlemen that are essentially taking 10 to 15% of every transaction as commission. So GoPro wants to increase its direct-to-consumer from its website and decrease the actual commissions taken by these other guys, because that is lost profit. And by doing that, it's going to increase the profitability of the business. Now, this strategy is exciting, but the question is, has it actually been working? Let's have a look. So let's look at the earnings for GoPro on the 5th of August. Revenue is up 86% year over year. Now that is a turnaround if I've ever seen one. Look at this. Their EBITDA is a positive 25 million, which is 10% of their revenue. This period last year was a negative 22 million. In a year, they went from negative 22 to positive 25 million. Again, spectacular results. Their cameras that are on the more expensive end, so cameras with prices above $300, represented 94% of revenue this quarter. People are spending more money with GoPro than they were before. Look at the presentation here. In 2018, cameras that were less than $300 accounted for almost 60% of the sales of GoPro, whereas the ones that were on the higher end, so over 300, were over 40%. Today, the cheaper ones are only at 16%, and the rest is coming from the over $300 ones. So people are indeed spending more with GoPro. People want to spend more for better quality. Yeah, look at this. The revenue direct to consumer from GoPro.com increased 48% year over year to $88 million. 35% of revenue is from that. Those are very strong growth numbers. GoPro has a strong brand and a strong moat, and it's been able to translate that into the subscription strategy. This is also very exciting. Look at this. They announced Open GoPro, which is an open API initiative that makes it easy for third-party developers to integrate their Hero 9 Black, which is one of their products, into their own development. This is potentially expanding the total addressable market of GoPro. Imagine they can start monetizing on the API. This is really taking GoPro from a hardware retail company to a software SaaS business. So that's a possibility. Let's have a look at the financials. Their cash flow has been horrendous. Since 2017, every single year, it has been negative. The company is generating a very strong free cash flow now. They're generating 198 million, almost 200 million in free cash flow. 4 years ago, they were at negative 60, negative 50, negative 30. Last year, they finally have positive free cash flow. And the last 12 months, it's stellar numbers. It's never been better. This turnaround strategy is generating a strong free cash flow position. But the fact that it has had these consecutively negative free cash flow years makes it a very unfavorable stock on Wall Street. And I will show you why later. Let's have a look at the balance sheet. What I want to see is GoPro's cash position. Look at this. Cash and cash equivalents. So that's $325 million in cash last year. Let's look at their liabilities. Wow. So they have 262 million in current liabilities. So short-term obligations, debt that they have to pay. Just their pure cash. We're not talking about receivables or inventory or prepaid assets or restricted cash or non-current assets. We're talking only their cash position here. They have more than enough cash to pay down all of their current liabilities. So we want the current ratio to be above 1.2, meaning that from 1.2, they can pay down all of their short-term debt, but this is not even taking into account the rest of the current assets. So if we take into account the whole figure, so that's 556 divided by current liabilities, which is down here, of 262. They have a current ratio of 2.12. That is really strong. They can pay down their debt and do a lot more with that money. They can buy back shares, they can do dividends, they can reinvest it in the business. They have a lot of runway here. Now, the one thing that I wanted to point out, which is I think the biggest risk with GoPro, is this here. Shares issued. One factor that I look at when I analyze a company is, are they buying back shares over time? As you buy back shares, you're making the pie smaller. And so your slice becomes bigger as a shareholder. If they are selling shares, issuing shares, it means that the pie is getting bigger. And so your slice is getting smaller. And so that means they're diluting shareholders. And that's not what you want to see. You don't want your investment to be diluted. Okay, a lot of people don't look at this, especially owners of companies that are fast growing, like Tesla, for example. These companies are diluting their shareholders and at an alarming rate. And so GoPro here, they went from 147 million to 161 million. So they are actually issuing shares. They are diluting shareholders. This is not an alarming rate, but for me it's a big focus, and I'm paying close attention to this metric. So earlier I told you about how the free cash flow was consecutively negative over the last few years, and so that meant that GoPro on Wall Street doesn't have the best credibility, the best reputation. Let's look at analyst estimates for example, the revenue. They're projecting a 7.8% revenue growth for next year. Guys, 7.8%. That is so extremely conservative. I just showed you an 86% year-over-year growth, and they're projecting 7.8%. So that shows you that the market doesn't have a strong hope for GoPro because of this past history. And this is why this makes it a value play, because I don't think the fundamentals here have been properly taken into account. They have de-risked the revenue stream, which was the biggest weakness. They have expanded to an 80% margin. They now are generating more free cash flow than they have ever before. Their balance sheet is extremely solid with a current ratio of 2.12. And if you look at multiples, for example, GoPro is valued at 1.5 billion enterprise value. By the way, I didn't use market cap because the enterprise value is essentially the market cap plus the debt. And the debt can actually be a very big part of a company's valuation. So that's why I recommend using enterprise value. So if you look at enterprise value to revenue, so this multiple here, it's 1.37. If this were 1, it would mean that the enterprise value of the company matches exactly the revenue of the company. So if a company is worth $1 billion and they're bringing in $1 billion in sales, that's an amazing ratio of 1. That's very rare. Of course, it's not, companies these days are valued, like crazy, but 1.37 is very good. The EV to revenue multiple is very well grounded. And so this is also why I find GoPro to be a promising opportunity from a valuation perspective. The PE is slightly higher than I want it to be. I usually look for companies that are under 20. But this is fine because the forward PE is actually much lower. The valuation is so low right now that even if they don't hit their objectives, GoPro's downside is very minimal, but the upside is pretty substantial. And that's why I think GoPro is a pretty interesting turnaround strategy. So that's it for GoPro. Let me know what you thought about the company. If you like it, why? If you didn't like it, why not? If you have any recommendations for me, stocks that you want me to look at, put them in the comments below. Make sure you hit that thumbs up, and I'll see you next time, guys.